I just made 10% on my 100k funded next prop firm account. I won 5 out of 5 trades with a win rate of 100% this week. This was not from luck, and this was not just one lucky week. My entire strategy is backed by over 200 years of data collected and well over 5,000 trades. How is all of this going to help you? Well, by the end of this video, you are going to learn a fully rule-based technical trading strategy alongside pairing up this technical strategy with the fundamentals of price, aligning you on the right side of price, making sure that every time you execute, you are executing your A+ setups. My past 200 plus minus years of backtesting, I achieve about a 75% win rate. And this is without the help of fundamentals, because on my backtesting tool, I can only really backtest technicals. And the final cherry on top, by the end of this video, you are going to learn my bulletproof, dynamic way of approaching risk management with rules that will make sure you never fail a prop firm account again. Let's waste no time and dive straight into it. My specific strategy is fairly simple. It's a 5-step criteria checklist, and every time those criteria print, we execute, regardless of what we think or how we feel. Instead of having our emotions and our thoughts deciding when I trade, I've now replaced that and now have rules that decide when I execute. And the reason why I have shifted from a discretionary trader to a fully rule-based trader is because that way it is much easier to collect data and prove that your specific rule-based trading strategy is actually profitable long-term. If you think about it logically, if you're jumping in between different strategies, different concepts, different time frames, different risk management rules, upon your backtesting, you may have a very good session of a 60 to 70% win rate, running maybe a good risk to reward, but as soon as you hop onto live price, you're almost losing every single trade. And the reason that this happens when you're backtesting a discretionary system or way of trading is because it's impossible to know if that particular strategy has any long-term consistency because it's changing all the time. It's kind of like a chef. If he changes his recipe every single time, it's going to be impossible to cook the same dish by changing that recipe in every single time. You need to have the same proven delicious recipe to cook that delicious dish every single time. And it's kind of the same thing if we compare discretionary traders with rule-based traders. I'm going to make this nice and simple for you. I'm going to give you the opportunity by the end of this video to join my free trading Discord. All right, I'm not a guru, I don't mentor, I don't have any sort of paid offer or subscription or upgrade to some crazy $2,000 course. Everything that I do in terms of what I talk about here is 100% free. Why? I used to be in the space, I used to be in the industry. I've personally moved more into the corporate world of trading, so I don't need to be on social media running this marketing business full time. I enjoy making a few videos and documenting my own journey. Those that want to watch can watch. Those that don't want to, you don't have to, and you don't have to be here. Therefore, by the end, you will get access to that free Discord server. Let's dive into the juicy stuff. So my specific strategy, 5 criteria model. I'm going to break down each and every criteria in its specific step so that you can understand it to the T, start collecting your data on my model, and building a profitable edge yourself. Now, I have a very good saying in trading, first of all, and I recommend that you pay attention to this entire video if you want this industry to work for you, not just specifically with my model, but this is the approach that you should approach with any model that you want to trade. The same approach that I've used on multiple of my prop firm accounts with FTMO, Funded Next, Alpha Capital, time and time again, even my own private equity accounts. It's the same edge, the same rules, but all of that is backed by proven data. And any model or strategy that you are wanting to trade, ICT, support resistance, there's millions out there on YouTube. You need to have data that backs every single decision that you make and every move that you make in the market. I'm going to scroll down here and I'm going to start with my criteria number 1. So number 1 is my structure story. Now I've kind of put on my own Pine script on Tradingview that really marks it out for you. So it's super simple to understand, but essentially what we're looking for is structural highs and lows. All right, obviously in a bullish trend, we'll see breaks, strong lows, anticipation of price to protect those strong lows, vice versa with a bearish trend. Fairly simple, right? Number 2 is we need to see a strong low or high, sweep,
and number 3 is the break of structure after that sweep. So just to draw this visually so that you can understand, what I want to see is a sweep of a previous low that broke structure, and then a new break to the upside, creating that new strong low. So that is criteria 2, and that is criteria 3. Okay, criteria 4, we need an order block. Number 5, with volume. And number 6, it must be below the 71 fib level. And it's as simple as that. And that's all I'm doing, the same repeatable process to get a 70 to 80% win rate in the long term in this industry that has gotten hundreds of my members funded time and time again. Not just being able to get funded, but actually being able to maintain consistent payouts on those funded accounts. And all of this paired up with the way that I approach fundamentals of price with my risk management strategy is pretty much the cherry on the top of the cake for me. Okay, so coming back to criteria number 4, we need to see an order block supply demand zone that has created a fair value gap. That fair value gap is what we call our volume. And then last and finally, fib from the low to the high. That order block needs to be below that 71 fib level. Show you 1 or 2 examples on price just so that you can start practicing to see it. Don't worry, I'm going to give you access to all of my backtesting videos. So all of my data collection series is recorded and posted for anybody to watch to learn this model, which you will get in the Discord at the end of this video. Okay, so if it doesn't make sense now, you'll have a very good understanding by the time we get there. So really what I'm looking for in price, just in terms of technicals now, all right? Immediately over here, I can see this is my structure indicator, by the way. It's called funded structure. It's not public on TradingView. Again, all of these resources will be in the Discord server. So here we had a high that broke structure to the downside. We swept that high and we created a new break to the downside. So if we go through our criteria list, number 1, we have that strong low sweep. In this case, a strong high sweep. Number 2, we created that break to the downside. Number 3, we have an order block, a big wick candle that created a volume gap. That is a form of volume. We have volume. It is above or on the 71 fib level. So that is check. Number 5, obviously our structure story is already done. So that's a 5 out of 5 trade. All of the criteria is there. We set limits and we don't argue. Okay. But now in my scenario, just because all of these 5 criteria is there, doesn't mean I'm just now going to execute. There are multiple confluences and things that need to align up before I just take this trade that makes it very high probability. I'll show you 1 or 2 more examples. If I come over to GBP JPY, which was a long position I recently took, also live with my community. Strong low, sweep this low, broke structure to the upside. We swept that low, broke new structure. Order block with volume, 50% refinement is below the 71 fib level. Entry on that order block, 1 to 2 risk to reward reaction. So I purely trade strictly 1 to 2 risk to reward. Why? It keeps the win rate nice and high and it's super profitable. I come from a background of trading high R but lower win rate, because remember, naturally, the higher your risk to reward, the lower your win rate's going to be. I prefer lower risk to reward with a much higher win rate. Just based on my data and my live performance, I've reached far better profitability that way, far more consistency and return instead in terms of monetary gain and percentage gain in the long term on my particular accounts, trading this way. So this decision was not just because I felt like it, it was based on and backed by data, what my data was telling me, what my journal was telling me, what my backtesting was telling me. Every decision that you make, every tweak that you need to make, or every tweak that you make on your model needs to be backed by data. Okay, I'm going to come back to the odd USD trade. We'll go over 1 or 2 more examples. And now I'm going to go over my A+ criteria checklist, which includes my fundamentals. What you're seeing on the chart here with my break of structure, my strong high sweep or strong low sweep, my order block with my volume, this is what we call technical analysis. The particular components that we draw on our chart from where we anticipate price to react or where we are looking to execute our particular trade. That is what we call technicals. So that's essentially my technical rules. Now I want to dive into fundamentals, but before we do that, let's just go over the definition. So simply, if you do a quick Google search, fundamental trading is a method where a trader focuses on a company or a specific forex pair, indice, commodity, and specific events that determines when to buy and when to sell. So trading on fundamentals is essentially more closely associated with buy and hold strategy rather than short-term trading. Honestly, that's not a great definition. Really what it is, it refers to the underlying economic, financial, and political factors that influences the movement of that asset, stock, or currency. So really what I want to see in my fundamentals is what we can call the big money is doing in this market. My first tool that I have over here is my COT reports indicator that tells me what the larger institutions that are 70 to 80% of these markets are doing in this market. So I can immediately see my two important factors is institutional and retailers. I don't really pay big attention to commercials purely because commercials are more your hedge funds. For me, the two most important ones is retail and institution. So I can already see, I obviously have a short setup on AUD/USD. I can tell from the COT reports that were posted a week ago that institutions are also generally short on this particular market. All right, I can see here the AUD versus the USD. 72% of institutions are short on the USD. What that means is they're anticipating price to go short. So my first fundamental confluence is that I am trading in alignment of the powerhouse that's moving this market. And that's the side of the market that we want to be on. So there's criteria number one for me, in alignment with the COT report data and what the big institutions are doing. Majority of them are hugely short in this market. Criteria number two, fundamentally, is I like to have a look at what smart money and retail is doing in live price and compare them to each other. The second script that I have over here is called my funded smart money interest index. So what this shows me is what smart money is doing in this market, which we can actually use to forecast where potential volume is going to come into price. Really what I'm looking for is, and I mean, even if we go back in chart, and even if we look back at the chart, right, this huge bearish run since this area, this black candle here, all the way down here till this reversed. All right, price was heavily bearish. We were pretty much tanking. But what was smart money doing? Smart money is actually busy buying this market. So based on that forecast, all the way from up here already, we know that this drop is not going to last for long because this heavy buying volume will have to kick in at some point in price. All right. Now, how I pair up my smart money index with my retail index, the retail is essentially the 80% of traders around the world that lose in trading. They are the guys that really get liquidated. Now, that is the side of price I don't want to be on. So while price was going short, have a look at what retail was doing. Retail was going short, institutions were going long. Institutions liquidated those retailers, where their volume now kicked in. Now, what I want to see with my 5 criteria for our model is when price is pulling back into my specific supply zone in the scenario, I want to see the institutions shorting, and I want to see retail starting to long. All right, so from down here already, retail was starting to buy price. So we know longs is not the side of price that we want to be on at the moment. We want to be short on the opposite side of price of what the majority of traders are getting wrong on this market. All right. So now that I have all of my fundamentals aligned, I'm in alignment with my COT report data as well. My 5 criteria in terms of my technical analysis is there. This was an A+ trade. Limit set, stop always at the 1, 1 to 2 risk to reward reaction. Okay. So now, as price was going short, when I hit TP, what did retail start doing? They started to go short. Institutions started to go long. So now we can see that volume kicking in, liquidating those retailers. My last and final confluence, I'm not sure if you've ever heard of a tool called Bookmap, which is essentially a smart money order flow footprint. I'll wait for this to load up here on my other screen. which is a heat map that looks like this on a candlestick chart. So this is BTC USD, and we can see these areas on price where there's heavy volume kicking in from the institutions. Price likes to fulfill this volume and continue in its intended direction. Now, you cannot just rely on a specific book map to place your positions, but you can use this as a great confluence for your specific zones, POIs that you are looking to trade from. Now, what I've done is, with help with a developer, I've been able to take the idea of bookmap and turn it into a Pine script, much more simple Pine script on Tradingview. And we have that same bookmap or heat map on Tradingview. So if I enable this over here, we can see that these colorful candles, orange, red, and yellow, are the candles that you are looking for. So those are the candles where there is heavy institutional supply or demand coming in from those particular areas in price. So my last and final confluence of this AUD/USD short was we were coming into a highly involved institutional candle that created a lot of supply from this area. So we know that when price pulls back into the zone, we can anticipate a much larger reaction because there will naturally be a lot of orders resting in this area of price for price to get a sufficient enough reaction for us to profit on. So with every single aspect of my components and my strategy aligned, A+ trade, beautiful to our position. All right, I'll go over one more. This was a CHF JPY, a short position that I took on the 25th of March, no, 7th of March, 2025. We had a nice sweep of an internal strong high, internal break to the downside. So if we go through our criteria in terms of technicals, strong high sweep, break of structure after that strong high sweep, order block with volume. There's that order block that created volume, aka a fair value gap, and it was above the 71 fib. So technically, in terms of technicals, our rules were there, our criteria was there. Let's go over fundamentals. Okay, so I can see back during this pullback, if I come back to before the candle I was tapped in, I can see on my COT reports that institutions are shorting this market far more than retailers and commercials. I can see that 79% and over 133.651k net contracts are currently short in this market by the big guys that essentially move these markets. So that already is the side of price that we want to be on. Okay, so there's fundamental number one. We're in alignment with the COT reports. Fundamental number two, what is smart money doing? Well, as we're pulling back, smart money started shorting. So price is buying, but we know smart money is actually shorting. So all of this is a liquidation to liquidate these retailers starting to pump in their buy positions. So there's number two. Number three, retail is starting to buy, smart money is shorting. And that is the side of price we want to be on. This is not the side of price that we want to be on. Nice, beautiful, high volume institutional candle. And how this played out was, obviously this is a one-time scenario, but there is thousands of trades back-tested in my Discord. Oops, we got tapped in. I'll get rid of this now. There we go. We got tapped in, institution still shorting, got our 2 risk to reward reaction. All right. As price hit TP, what did the institution start doing? They started to buy. Retail started shorting. So what can we expect? Institutions to liquidate them. Okay. If we have a look at what's happening now, price is basically going short here, interim and short term, but institutions are buying this market heavily. What is retail doing? They're busy shorting. So I'm anticipating going into price tomorrow morning, Monday, we'll target these weak highs or these highs over here and liquidate those retailers. Okay, there's an example of trade number 2. Trade number 3, GBP JPY longs. All right, for me, beautiful A+ trade, really nice, strong low sweep. Break to the upside, criteria 2. Order block with volume below the fib, criteria 3, 4, 5. So technicals, our criteria is there. Now what we want to use is our fundamentals to back up this trade and build up that portfolio of evidence that this trade will potentially run. Okay, have a look during the pullback phase. Right away, all the way down, before we tapped in, what did the institutions started to do? They started buying price all the way from here till we got tapped in. They were buying price. What was retail doing? Busy shorting price. COT reports, yeah, the COT reports were more short than long, but it was fairly balanced because what I do like about the COT reports, there is still a lot of long contracts in this market. So the COT reports, keep in mind, these are reports that are released every week from the Commitment of Traders website, the cftc.gov website. Those institutions have to publicly submit their reports every once in a while, and those reports are then extracted through my Tradingview Pine script onto Tradingview in a neat little table and a neat little RSI looking indicator here. So for me, I know that I'm looking for longs, but yes, from the past COT report, institutions are more short on this market. But I also like to look at what institutions are doing now in lifetime. And that's what's more important for me than just relying on the COT report for fundamentals. Because I can see what's happening now is institutions are starting to buy, retail is shorting. There's my two main fundamentals for this particular long position. And then finally, in terms of heat map and institutional volume, beautiful, valuable, high volume candle. Okay, within obviously our technical rules as well. So that was trade number 3. Trade number 4, NZD JPY. Also, nice previous strong low sweep, break to the upside, order block, volume below the fib. Our 5 main technical criterias are there. Let's start having a look at our fundamentals. So fundamentally, I can see on the COT reports that institutions are short. But again, what I wanted to see was what smart money was doing now. So I could see as price was pulling back, institutions started to buy. Here, retail was still shorting quite hard. So for me, that was my fundamental confluence for this trade. Not A+, just A, purely because it wasn't in alignment with the COT report. So we know that short term, this is just a bit of a bullish pullback, and the overall bearish volume from COT reports should start kicking in a week or two later. And obviously, if we get a technical setup in alignment with those fundamentals, that will be A+. NZD JPY, as soon as I saw institutions buying, retail shorting, that was my fundamental confluence for the technical trade, wanting to stay on that right side of price. Okay, last and final trade, USD CAD short position. Okay, nice, strong high sweep, break to the downside, order block, volume above the fib. Nice high red candle heat map volume, so we know there's a ton of orders resting here to potentially get a sufficient reaction from. And let's have a look at our fundamentals. Okay, MM funded smart money during this whole pullback. Yes, it looks bullish. We're creating strong lows, higher highs, and higher lows. Price may look bullish, but for me, it's the complete opposite. It's a bearish market. Firstly, what's retail doing? Retail, during this whole pullback, is busy buying. Okay, that is the side of the market we do not want to be on. Institutions are shorting heavily. From here all the way up to tag in, they were shorting this entire market. We get tagged in, lined up with our technical trade, backed by the fundamental analysis. What is happening now? That short volume is starting to kick in. Institutions are starting to buy, retail is starting to short. So potentially from here, we could start to see a bit of a bullish run until that institutional volume is forecasted to go short again. And that's the beautiful thing about this indicator as well. It's not delayed. It is a forecast tool. So you'll see over here, if I go well before I got tapped in, we can already see long before we tapped in, institutions are short, retail is going long. These are forecasts, not delayed indicators based on old price action. Okay, so that's the biggest advantage of this. So there we go. So this is essentially the 5 trades I took this week to have a 100% win rate on Funded Next. Okay, so before I give you access to the juicy stuff inside of the Discord, my live stream trades, my live streams every Tuesday, Thursday, and Sunday, where we set limits together, go over the fundamentals and technicals of price based on our rules, I want you to understand, and this is the biggest foundation of any trading model, and this is my bulletproof way that I used that has allowed me to not fail a prop firm challenge in the last 2 years. Fun fact, before I got funded and my first ever payout, I failed 24 prop firm challenges. Everything that I've built today, everything that I know, everything that I do with my clients, with my own personal capital, is through data that I've learned from those particular failures. In this industry, losing is going to be the reason why you become profitable. Because when you're losing, but you're actually trading a rule-based strategy and edge, you actually now have a very valuable data set to learn from. Whereas if you're losing, but you're doing stupid things, you're stacking positions, you're just buying and selling price because you see a zone, support resistance, there's no rules, you're actually left behind with no data set that can give you any valuable information. Therefore, you're not going to get anywhere. And that is why losing in this industry is going to be your key to doing this full time and making a full-time income from this. But when it comes to prop firm challenges, here's my specific approach that I use to never fail a prop firm challenge. I'm going to use 100K. 100K account, let's just say FTMO. First trade, I like to risk 2% if it's a really A+ setup. So one of two things are going to happen. You're going to lose and your account's going to be on 98K, or you're going to win and your account is going to be on 104K. Okay? From here, from 98K, I will risk 1% on an A+ setup. So the two outcomes will be, we'll lose and be on 97K, or we'll be back to 100K. Okay? If we're back to 100K, repeat back to 2%. Once we're at 97K, 3% down or more, I risk 0.5%. Let's just do this. 0.5% risk. So therefore, the two outcomes will be, if we win, 98K. If we lose, 96.5K. From 98K back to 1% risk, 96.5K, you keep going at 0.5% risk until that edge brings you back to 2% above. Now, the beautiful thing about the way that I trade on the higher time frame, for me with prop firms, daily drawdown does not matter because I hold trades most of the time more than 24 hours. The max drawdown is more important for me. So I usually have 10% to play with, whereas most lower time frame traders only have 4 or 5%. Okay, so doing it this way, when you're up on your account, 2% risk on A+ setups. If you have multiple limits at the same time, use 1%. If you only have 1 or 2 really A+ setups at that particular time and you're not going to get tagged into anything else, then you can go 2%. The reason I do that is because let's say I've got 4 limits set on 4 pairs, 2% risk each is a total of an 8% risk, which for me is too hefty. I won't risk all of that at one go across 4 pairs. I'll rather diversify that risk and keep it safe. Okay, so what I calculated here, using risk management this way, firstly, you're going to scale very nicely. Secondly, it's going to take you 17 losses in a row to blow this account, which through my close to a decade of trading, well, since I started using this, through my 200 years of data collected, I've never come close to this. It's very short, sweet, simple. You've just got to remain disciplined to it. That's the hardest part. Because what most people want to do is when they're 5 or 6% down, they want to risk 2 or 3% to try and get that account back to break even for the day. What happens is they lose that trade and they blow that entire account. Whereas if you just safely risk your 0.5%, let your edge bring back your account. Let it play out. You can't control the outcome. Your job is to execute your rules, and your edge, however the trade plays out, doesn't actually matter. You've done your job because that is something you can't control. Okay, so there's my risk management simple strategy. I will leave a much more in-depth video on this in the description down below as well, on my video titled My Bulletproof Way of Never Failing a Prop Firm Challenge Ever Again. Now, if you want to get access to my Discord community over here, where you can access all of my limits, my live trades, my public journal, my track record is public for anybody to see. The course content is all here in video content. This teaches you more about the basics of price and then my particular higher time frame model. All right, the only indicator that I have launched at the moment is my structural indicator. The fundamentals will still come. Very short, sweet, simple community. We only have about 10 channels. We're strictly just a free live trading community for anybody to join and for anybody to learn what creating a real edge in trading actually looks like. With that being said, guys, I'll see you in my next YouTube video. And if you're going to join inside MM Funded, happy to have you and happy to work with you. And I'll see you inside of the streams.